Man, we have got the lawsuits flying in California. Insurance companies, watchdog groups, commissioner, you name it, they're all getting involved. This one, California home insurance market collapse warning issued after lawsuit. Now, the insurance industry has basically already said, we don't want much to do with California. But with the Fair Plan Act involved, it's going to get hairy. Let's get into the details. Here we go.
Yeah, I just spoke to Consumer Watchdog. That's the group filing this lawsuit. They say point blank, a move to pass on a surcharge to customers by the insurance commissioner is an overreach of authority. Let's back up, though, and remind you about why they feel the lawsuit is needed in the first place. In February, Commissioner Ricardo Lara ordered insurance companies in California to give $1 billion to the Fair Plan, which is typical after a catastrophic event. Something called an assessment is done to determine the price tag needed to cover significant loss. The Fair Plan, also known as the insurance of last resort, can put that call out for money out to insurers, and usually insurance companies just pay up. In this case, though, after the devastating LA wildfires, insurance companies who are approved for a surcharge can pass that fee off to its customers.
That was the deal that they cut with the insurance commissioner. The insurance commissioner wants as many companies to still do business in the state, because the more you have, the more competitive it is. Your rates are lower. But when he's cut a deal like this, then the watchdog is basically stating, you've basically cut out the insurance companies, and now you're laying all the responsibility of all of those, losses onto the consumer. They don't find that to be fair. Well,
Consumer Watchdog says is anything but fair.
So basically, homeowners would be entirely responsible for insuring these catastrophic losses of the Fair Plan. And I do think that's outrageous. The Fair Plan was created. It was a plan sponsored by the insurance industry and supported by the insurance industry. And now that they don't like how it's played out, they want to change the rules. And
no, they already have changed the rules, and you're looking at the results of those rules, and you're going, that doesn't seem fair. This is California, right? I mean, the consumer is just going to get absolutely screwed. It's California. So it's like Washington State. No different. If we had a lot of forest fires here, Washington State, which we do, but they're usually east of the mountains and they don't hit populated areas. But we'd be absolutely screwed same exact way. Oregon's experiencing that, Idaho. I mean, it's not just California. And this one, because these are insurance, there's only a handful of insurance companies out there. Your auto insurance rates are going to go up. Your homeowner's insurance is going to go up. Your RV insurance is going to go up. Your E&O insurance for whatever. All that stuff is going to go up. And that's why, hey, is there a collapse going on? This is a catastrophe. Yep. Well,
and we don't think that's fair. We think it's against the law. And yeah, people should be outraged.
It's important to know that the lawsuit filed against the Fair Plan won't impact their ability to pay out claims. Several companies, though, have already applied to pass the cost to customers. Consumer Watchdog is suing for the commissioner to have to go through proper channels and not allow companies to shift those costs. We reached out to the commissioner about the lawsuit and have not heard back.
This is one of those deals where the insurance industry, to me, they've been fairly transparent. Hey, you got a lot of fire risk. We're going to pull out. And they have been pulling out right before the fires hit LA, the last batch that we just had. I think 1,600 policies, State Farm pulled back, meaning they basically said, we're not renewing that policy. This has been ongoing for years and years and years. And people have been stating it's gonna come to a head at some point in time. And that's where we've literally got folks saying, hey, you've got a crisis going on. You've got a possible meltdown in your marketplace. Why does this lawsuit matter? Well, let's read. Lawsuit filed Monday arrives as California grapples with a deepening insurance availability crisis. You can't get any. Over the last several years, major insurers have scaled back or exited the state's home insurance market entirely, citing unmanageable wildfire risks and state regulations that limit rate hikes. And we haven't talked about the rate hikes for a while. The way the insurance industry works in California with their commissioner, they've made it so difficult for insurance companies to hike those rates up. They have to go through this massive process, and they have to basically fall on one knee and beg, oh, please, won't you let us increase the rates to the consumers? And with inflation the way it's gone the last few years, the costs, the construction costs, and all that it takes to rebuild these properties has gone through the roof. So inability for the insurance companies to easily make adjustments based on what they see as market conditions, meaning you've got inflation that's caused all these costs to rise as they rebuild that they're responsible for, on top of, a market that doesn't allow you to do that quickly or easily. And so they had to cut some deals. And one of the deals was, okay, we'll still be in your state, but we're going to spread that risk. And the FAIR plan, they're going to spread that risk even more. Wild stuff. This pullback has fueled explosive growth in the FAIR plan, meaning all the private insurance companies, the State Farms and the Allstate and whatever, has explosive growth in the FAIR plan. Up to 560,000 folks have got these policies, and that's up from, I wanted to say it was like 200,000 not that long ago. So, it's doubled and then some, right? Following the January wildfires, which killed 30 people and damaged or destroyed more than 16,000 structures, the FAIR plan reported $4 billion in expected losses, enough to drain its reserves and most of its reinsurance coverage. Now, also State Farm did go to the insurance commissioner and said, we need I think it was a 17%, 22%, 38%. You had a bunch of different numbers, but on average, I think it was a 17% increase, or low 20s, something in those numbers. They did go to the insurance commissioner and say, hey, we need these increases just basically to keep going. And the insurance commissioner said, you know what, if you come by and give us a little talk as to why you need the money, on top of, we need you to get $500 million from your parent company, State Farm Auto, to kick in to the fire insurance outfit portion of State Farm, basically putting them through a song and dance, right? We're going to make you dance like a little monkey in order to get your increase in rate approved. What to know? The legal challenge centers on a decision by Laura, the insurance company commissioner, to allow insurance companies participating in the California FAIR Plan to impose surcharges on policyholders to recoup losses stemming from the so basically just spitting those losses not out to insurance companies, but in the form of rate hikes to other folks that have insurance policies in California. We're just going to spread the love around. We're going to spread the love around. You guys are all going to love it. Doesn't that sound like a California thing? Doesn't it though? How soon until Gavin Newsom gets involved? According to the lawsuit, this move could result in millions of dollars in added costs for homeowners statewide in an area, in a state where insurance is already super expensive. If you can get it, now it's going to become even more expensive because this is the way things are going, right? Consumer Watchdog filed the suit in Los Angeles Superior Court, arguing that the plan amounts to an unlawful bailout for the insurance industry. It does seem that way. Now, whether or not there was something done illegally, the insurance commissioner kind of working with the insurance companies. All right, guys, here's the plan. We're still going to keep the FAIR plan in place, but when the shit hits the fan and, FAIR plan's basically insolvent, here's what we're going to do. just a little bit of risk goes to all the other policies out there. Now, all the other policies are looking in going, well, your program, the FAIR Plan, is insolvent. We don't really think that it's legal for us to have to come up with the costs that the insurance companies should be covering. We don't think that's fair. You're sued. We look forward to defending the rights and pocketbooks of Californians and stopping the socialization of FAIR Plan losses at the public's expense, said Ryan Molino, an attorney for the nonprofit, in a statement. Odds of them winning? Not high. I don't think. I'm just throwing out ideas here. Why? It doesn't seem to me like this is, firm footing to stand on. All of this stuff involving the insurance companies, it's all open to a lawsuit. Insurance companies, they probably sue the state. Hey, you said you were going to do this and you didn't do this. Therefore, liability, more damages happened. We're suing you. I could easily see that. You just got lawsuits flying all around, right? You just all around. The disputed surcharge plan stems from Laura's 2024 agreement with the FAIR Plan. We've talked about that. As these things are going on, people got to cut deals. And these are the deals they cut. And then when they become reality, oh, good Lord, that is a socialization of the FAIR Plan. We can't have that. And then they sue. And they see if they can make it go. To me, suing, yeah, you got to do it. But so many of these lawsuits, I'm just kind of looking in from the out going, that's a maybe. That's a maybe. I mean, maybe they're suing just to make a point. I think so much of this is, they're not ultimately looking to, win millions and billions of dollars for the consumer. They just want to put pressure on the insurance commissioner to maybe let's rework how this is going to go down the road so consumers don't get absolutely screwed, which is what appears to be happening now. But this is what's been happening with insurance for years and years and years and decades, really. Under that deal, if catastrophic losses exceeded the plan's financial buffers, member insurers could recover their share of payouts by applying surcharges with the commissioner's approval. Man, insurance commissioner has some real power when it comes down to, big ticket discussions like this, because it really, really, really does impact things. If you're in a market where if you need to get a mortgage, and let's be honest, California is super expensive, and you go into your meeting with your loan officer, and the loan officer basically says, hey, everything's looking great. Did you work on that homeowner's insurance policy? I know we're kind of close to the wildfire proximity. And you have to say, we're working on it. We're trying to figure that part out. Maybe we'll go with the FAIR Plan. I could see lenders turning down the FAIR Plan. Hey, it only covers XYZ, $250,000 or whatever of that kind of damage. And the rest, well, you're on your own. You got to rebuild that $2 million home for, whatever you got out of pocket and you can cover, and then a little bit from the FAIR Plan. Not exactly an environment that a lot of lenders are going to want to deal with, right? The arrangement allows for up to 50% of the $1 billion in residential insurance assessments to be passed on to consumers, and potentially 100% of any excess amount in the event of future disasters. So if this happens again, like this summer, all bets are off, right? Just absolute chaos. And that is literally what we're talking about here is market collapse. California insurance industry collapse because not enough money, and you got a bunch of lawsuits flying around, and you've got an insolvent, basically state-run deal. It's literally going to be confusion if you get another couple of big fires, because now you've added layer upon layer, and hey, we said this was going to happen. Now this is going to happen. It'll be some wild stuff. Meanwhile, and I've pointed this out, what do we hear from Gavin Newsom on this issue? Well, not a lot, because Gavin Newsom is catching some heat again. As Los Angeles' 2028 Olympics headed for disaster with costs skyrocketing. Can you believe that? Costs skyrocketing in California. And here's the big one. Sponsors pulling out. Not good. Not good. Not good. You just got a couple of sponsors left because people don't have a lot of faith in California, its leadership, and certainly not in the insurance companies. They're all suing the insurance companies because deals were cut. You know, things were done with the insurance commissioner that now when the rubber hits the road, we've got a disaster on our hands. But yeah, this one here, Gavin Newsom he's in the hot seat because there aren't enough folks that want to sponsor the 2028 Olympics. Not a shocker, right? Meanwhile, California Governor Gavin Newsom catching heat for his involvement in the 2028 games from both the left and the right-wing groups. Newsom's attempt at smoothing over rising concerns around the games have led to a rebrand attempt, dubbing it the Recovery Games. Oh, that's terrible. Are we all a bunch of alcoholics and drug addicts here? We're going to go to the Recovery Games? No, that's just what jumps at my mind. Recovery from the fires, guys. With the goal of creating an LA 2.0, which appears to have rubbed his constituents the wrong way. It's an unacceptable gamble of public money, said Eric Sheehan, spokesman for the No Olympics LA, a group protesting the event. You've literally got groups now that are saying, LA, Olympics, no go. I think Los Angeles had the Olympics like 1984. Is that right? I think I was a freshman in high school. And the Olympics were held in Los Angeles. I can't remember. Does that sound about right? I could Google it if I really cared. So because, Los Angeles has massive, as in California, budget shortfall. And most big cities have a big, Washington State has like a $16 billion budget gap. They call it a gap. Income and spending and income. So for Los Angeles, the games, scheduled for the last 2 weeks of July, were touted as a slimmed-down extravaganza that would be largely funded by corporate sponsorships. And now that funding, it's not looking too good. Because people are like, is this going to happen? Are we really going to do this? And they're pulling sponsorship out because there's questions about this happening, and there's questions whether California should really be hosting the Olympics. So right now, Delta Airlines and Comcast are the only two major sponsors carrying the can. Key figures organizing the games walked out as the economic picture got worse. Then LA was hit by deadly wildfires in January that virtually wiped out the communities of Pacific Palisades and Altadena, putting a huge strain on the city budget. So all kinds of stuff happening all at the same time in California. Lawsuits just, I got a lot to talk about. There's a lot of stuff to cover here. The bottom line is your insurance is going to go up. Everything else in your life is probably going to go up. This is kind of what we're working with right now. Yeah, not a lot of fun, right? Insurance, one of those things where you're just like, you should just be able to go online and do a little thing. Yep, you get insurance, right? Like you do for your car. Not necessarily so. With housing, it's become more and more difficult for people in areas where there's even just a tiny little bit of risk associated with, well, you're 100 miles away from the wildfire zone, but it's 100 miles closer than that house over there, so we're going to insure them. You? Not so much. You got a ton of that going on right now because I hear from people, I hear from you guys all the time. Hey, I am not in a high risk area and I just had my home insurance denied. I don't have any wrecks. I just got my car insurance denied. Where do you live? I live in Sacramento. I live in. So a lot riding on these lawsuits. What will happen? Well, the lawyers will make some really good money. The rest, who knows? Make sure you're subscribed because I'm covering these topics. Thanks again for being here. I'll catch up with you in the next one. Bye for now.